This is going to be an opinion about something that I think is setting up as the trade of the summer. And I think that's the oil market. The oil market right now, is through $60 on the downside a barrel. Okay. It had a sell signal, technical sell signal. The whole way down, nothing. You get it now below 60. The market is putting on a short position. The market in oil is naturally across the globe a little bit long. When the market has no position in oil, that's considered short. When the market has a sell signal to get short, that makes it extremely short. Now you want to be extremely short, $75, $80, $85, fine. Not below $60. Okay, plus the market in the futures market is trading the futures are trading backwardated. So every day you want to stay short, you got to pay to be short. In the interim, get gasoline below $2, get heating oil pull back, crude oil below 60. All these things fundamentally are a cheap price. In addition, countries around this planet do not want oil below $60. Why? Because a lot of countries, that's their lifeblood. So you got speculators selling it to, we say, selling into the hole. They can be right for a while, but the more days we spend below $60, we don't want this to go below 60 and right back up. Spend a few days, spend a week, week and a half below 60. Get the more people on board, on this elevator looking down. That's fine. The thing is, when you got to cover, how are you going to cover in a backwardated market? How are you going to cover in a market that has sensitive news to the upside? We could have global tension. We could have demand tension. We could have weather tension. Okay, we see Iran pop out every once in a while. OPEC is just staying in line with what they're saying. They came out with a little news today. And our opinion is this is a setup for a trade on the upside. If you can weather, no reason to rush right in, but the trade is when you recognize it going. Okay, this is the trade, in our opinion, in oil. Not here and here and here. Let it do its work. Let it even try lower. But when it gets above the area, that's the trade. I would be more bullish buying oil here than I would right here. And because I would be a little bullish here, I'd be extremely bullish here because I think we're going to go. And the thing is, how are they going to cover? And what I use as my gauge is the gasoline market. So if I'm going to use the gasoline market, okay, this is gasoline. $2 a gallon. All right, guys, in my opinion, in the United States this time of the year, $2 gasoline is cheap. But if gasoline is going to hold and become buoyant down here and crude oil is lower, then you get more profit refining oil into gasoline, right? Makes sense. So when you want to look at a refiner, I explained the whole scenario. This is Valero, a large refiner that we trade. Okay, does this look like the oil chart? Does it look like the gasoline chart? No. Why? Because it's telling me that gasoline is buoyant down here. We looked last week. We had a clip. We talked about buying Valero. We bought Valero here. 107, 108, 109. Look at this thing. We think this has got room. You can maybe get a pullback here, put it on and add on more. We think Valero's got room. But it's telling us something. All these factors, the only reason to be short is a speculative short or a long-term technician. I can't see any other reason to be short oil. Now you got to sit there and there's no reason to rush in. But the trade is when you recognize things. These signals tell me we are short-term down here and long-term going to have a big move. And the trade of the summer, I think, coming up is the oil market.